morning. Mark Soderberg with ADM Investors with your morning ag outlook for Friday, June 13th. Israeli airstrikes on nuclear facilities and military installations within Iran overnight triggered a surge in global energy prices. While reports suggest oil infrastructure was not damaged, markets will still price in additional war premium over fears energy supplies from the region could become disrupted. The U.S. government has been quick to distance itself from Israel, stating they had no involvements in the attacks. Right now, crude oil, it's trading about $5.50 higher. That was after trading nearly $10 higher in the overnight session. The U.S. dollar also rallied sharply, this after trading to a 3-year low yesterday. This sharply higher trade in the energy space has not had a huge impact on agricultural prices. However, it has allowed bean oil prices to recover, currently up about 75 points. Beans are 2 to 3 higher. Meal is down $1 to $2. Corn is about 1 to 2 lower, while wheat has rebounded up 4 to 6 cents, led by Chicago. Bean oil was moderately lower yesterday in a big range following reports the EPA is set to propose biomass-based diesel quotas below the 5.25 billion gallons sought by the biofuels industry. Current capacity for biodiesel and renewable diesel production here in the U.S. Sits at just over 6.5 billion gallons annually. While the USDA made no changes to their South American production forecasts, others did. Yesterday, CONAB raised both their corn and soybean production forecasts for the Brazilian crops. I do look for higher numbers from the USDA down the road, possibly reaching the record production of 137 million metric tons on corn. That was made 2 years ago. Harvest for their second crop is still in the single digits. CONAB's soybean estimate now is just above the USDA. CONAB at 169.6, USDA held at 169. The Buenos Aires Grain Exchange, they placed Argentine soybean harvest at 93%, up 4% for the week. They also increased their production forecast 0.3 million metric tons to 50.3. USDA is stuck at 49. Corn harvest in Argentina is nearing a halfway point at 47%. The Buenos Aires Grain Exchange held their production forecast unchanged at 49 versus USDA forecast at 50 million metric tons. Although U.S. corn supplies have been tightening up on strong export demand, the market just seems to be treating this as old news as future demand shifts to South America and as U.S. weather remains non-threatening for at least a few more weeks. December futures just seem to be grinding sideways between 435 and 450. Looking forward to the month-end stocks and acreage data. Yesterday, the USDA was... Yesterday's USDA data was largely a non-event for the soybean complex, as both old and new crop ending stocks were left unchanged. Until a trade deal with China can be reached, it seems the USDA new crop export forecast seem to be optimistic. NOPA crush on Monday is expected to show NOPA members processed nearly 194 million bushels of beans in May, which if realized would be a record high for the month. Both July and November futures are chopping around near their 50 and 100-day moving averages. Waiting for clarity on the RVOs and a potential trade deal with China. The NOVE July spread seems to have stabilized between 15 and 20 cents July over the NOVE contract after several Midwest merchants switched their nearby bids to new crop contracts, effectively slashing their spot bids. After minimal changes to winter wheat production yesterday, look for higher numbers down the road. Also look for today's CFTC report to show speculative traders still holding a near record short position in the wheat market. Thanks for listening, everyone. Hope you have a great Friday.